I mean, based on just looking at the numbers and looking at the trend, to me, it seems like yield curve control is coming by mid-year to the third quarter of this year, just kind of spitballing.
I have no experience in that. And I honestly hope it's not the case, because as a credit trader, again, it's like, well, isn't that interesting? The sweat is starting to appear on the brow of the borrower, being the U.S. Treasury. They're starting to sweat. That's not what you want to see as a lender, right? You actually just want to see confidence. You want to see, even though they are out in the market purchasing $120 billion of debt each month, they're doing it in a fashion that isn't implying pegging the yield curve per se. I need to stress that the U.S. Treasury deciding to buy high yield bonds was in and of itself such a monumental event. And it was only because they needed to protect against the downgrade of 4 potential candidates being downgraded from investment grade or the BBB credit rating level to the BB credit rating level or high yield. Okay. Those 4 credits were General Electric, General Motors, Ford, and AT&T. Those 4 credits themselves are bigger than the entire high yield bond market. Can you imagine if those 4 credits got downgraded into the high yield bond market, the calamity that would have caused in the equity markets and in the subordinate markets of the capital structure? It would have been crazy. So the Fed went in and said, yes, we can buy high yield bonds. Now, they didn't just buy those 4 names. They decided they would buy the entire market. Well, now you've seen that high yield bonds are at the lowest yield they've ever been in history. And I will guarantee you, again, I'll make another guarantee. It's 100% certain that if you own high yield bonds right now, you will lose money on a real basis over the next 5 years, on a real basis. And you probably will on a nominal basis as well, after you subtract out true defaults, okay? It's only math. You need to pay your high yield bond manager a fee after you've paid all your fees and you've paid for defaults. Anyone who owns high yield bonds right now, I don't know, they must be just getting into the game, okay? Because if you showed me this 30 years ago, I honestly would have told you, well, it's impossible. It would not exist. But yet here's where we are.
You know, you said something to me that I had not thought about that I think is a really important point when we're talking about this yield curve control. They have no incentive to announce that they're doing it. They have no incentive to actually come out in a messaging kind of way.
If I was advising them on that, 100%. If I was the Wall Street guys advising them on that, I would tell them, do not do that.
Yeah. You can do it in practice. You can do it with the numbers, but don't stand up there on the stage and say, we're officially starting yield curve control. And
I think you're right.
We're a buyer at any price as long as it keeps the yields right here.
I think you're right. I think it would be, again, showing a sign of weakness rather than a sign of strength. I think that Chairman Powell is doing everything he can to provide the confidence to the system. I need to be clear. I do not want our system to fail. It will over time, okay? It's, again, a mathematical certainty, but how long is that time? I will give you probabilities that it's most likely within the lifetime of my children, which really makes me upset, okay? And it's maybe not as likely, well, certainly not as likely as it'll fail before my lifetime. But it doesn't matter whether G7 country fails. And if it's a G7 country, the likelihood, the market's telling you this, is it'll be Canada before anyone else. And that pains me as well. But there will be other countries that continue to fail. And this is just a fact of life. And the IMF and the special drawing rights that they've come up with and all this political back and forth between who will be the global reserve currency of the world. No one's saying Bitcoin, but that's what it's going to be. Bitcoin will be the global reserve asset, in my opinion. It's the most likely outcome. It's the safest outcome. But it doesn't mean the other system doesn't continue to function. We hope that fiat will continue to function to allow for commerce rather than barter, to allow for free market setting of cross-currency rates across the world. And we hope that because why? Well, because you can't just overnight go to a Bitcoin standard. It would be absolute calamity. You don't want that as the interim step. You want an orderly transformation of the understanding of what a reserve asset really is.